Now, I wanted to, I guess, put our stocks that we're going to speak about in the context of the major themes that the strategists in the US are actually seeing. So I'll run through these very quickly at a high level. So one of the big themes that we saw coming out of COVID last year was deurbanization. So definitely there's been a marked movement of the population away from the denser, higher priced real estate areas within the US, moving mostly to single home and to less dense urban areas in the US. And this has actually driven I guess, a boom in the US housing market. This has obviously had repercussions throughout the supply chain. We've seen timber prices reach all-time highs. That's come off a little bit, but definitely this migration of the population to less dense urban centers is something which is continuing. And there are definitely stocks that will continue to benefit from that. The second area, and this speaks a little bit to what Jay was mentioning in terms of, the market has been very focused on the mega cap tech stocks for quite some time. And as a result, there are some very good fundamental companies where valuations are low, but the analysts and the company managements are seeing improving ROEs going forward. So these are definitely a something for investors to look at, especially if you are getting nervous around that concentration of the market around the mega cap tech names. Third, reopening beneficiaries. So again, this is an area which should be of interest if you do believe that this Delta variant is going to peak sometime in the coming couple of months. So we saw how quickly the reopening beneficiaries did re-rate several months ago. That has now come off around fears of the Delta variant. But again, these become an interesting play as we move into the end of the third quarter. And then lastly, infrastructure beneficiaries. So right now, I'm sure all of you are aware that in the US, there's a great debate going on to try to pass an infrastructure stimulus bill. Build Back Better has been one of the key platforms of the Biden administration. And I think what the strategists in the US is actually seeing right now is this current outbreak of Delta is actually perfectly timed to help ease the passage of a larger stimulus bill. So compared to the spring where there was worries about inflation, etc., there was a lot of debate about how big that stimulus bill should be, or even whether one was needed. And I think the Delta variant is something which would actually help with the passage of a larger stimulus bill. Okay, so let's move on and talk about the stocks that we see benefiting. So in terms of deurbanization, our first stock here is Lennar Corporation. So Lennar is basically a developer. It was originally founded in Miami, but today it's one of the nation's largest home builders, with a market share of nearly 9% of all US new home sales. They do a variety of housing products and price points. I guess from a fundamental perspective, this is definitely a stock where the analyst is seeing another quarter of very significant upside on earnings. So initial guidance was to basically for record-setting margins going forward. The company itself is carefully managing its new home starts and order growth in order to maximize its operations. Right now, as you can imagine, supply is under quite constrained levels given construction delays, yet demand is actually very high. And so what the analyst is seeing is that pricing power has really exploded higher for Lennar's. From a technical level, Jeremy is seeing that the uptrend is well supported, and he recommends an entry at around $95 to $100 and about 15 to 20% upside from those levels. Okay, the second deurbanization pick we'd like to highlight is KB Home. Now, KB Home is headquartered in Los Angeles, California. It is one of the most geographically diverse home builders in the country, and the company offers a broad variety of products, very much targeted at first-time or first move-up home buyers. Okay, the products actually include a lot of detached single-family homes, which we know has been one of the focal points of this deurbanization trend. So again, the company reported second quarter results and guided for a very strong upside, and this has led to upward revisions across the street. Now, the shares actually have pulled back, as you can see, about 20% since mid-May, and this is based on concerns that demand may be slowing, or that delays in community openings would actually slow down that revenue potential. However, the analyst has actually conducted channel checks, and I guess the finding has been that while some of those elements are actually occurring, that actually the rate of price increases is still extremely high. So at this point, at current valuations, the stock is undervalued. And from a technical perspective, we're seeing that this price action is actually bottoming out, and that there's a breakout potentially underway. Okay. First stock in the discounted valuation and improving ROE theme is AutoZone. Now, AutoZone is a company that's headquartered in Memphis, Tennessee. It is the largest specialty retailer of automotive aftermarket products in the United States. So it actually services both do-it-yourself customers as well as commercial customers who prefer the service, the do-it-for-me market. The company has about 5,800 stores in the US, 600 in Mexico, and also extends down to about 40 stores in Brazil. Now, AutoZone, again, we've seen, I guess, a growth in the second-hand market for autos, given people have been delaying purchases of new cars, and this has really helped in the aftermarket spare parts. Now, the company has delivered stronger than expected third quarter results, and the analyst in the US is anticipating continued strong quarterly growth. So again, from a technical level, our analyst is seeing that while the uptrend remains very strong, the shares are currently overbought, and there could be a near-term correction. So we're recommending that that investors do look to buy on weakness, entry point around $1,500. The second stock that we'd like to highlight in terms of this discounted valuation improving ROE is Triumph Bancorp. Now, this is a banking company based in Dallas. They focus on, it's basically a community bank throughout Texas, Colorado, Illinois, and Iowa. Okay, now the company itself is seeing much more stronger fee income, and has also benefited from a lower tax rate. And going forward, we're expecting to see net interest margin and net interest income also beat consensus expectations. From a technical level, the shares have hit the support level at around $70. The uptrend should be intact, and we're expecting a breakout higher to happen potentially. So investors should be able to enter here and take profit around the $85 or $97 level. In terms of the third theme, reopening, there's a couple of stocks that we would like to highlight. The first one is DR Horton. This is a company based in Fort Worth, Texas. It is the largest home builder in the United States. It's delivered nearly 57,000 homes in 2019. And again, they've very much focused on single-family homes. They operate in 80 markets across 26 states. Now, inventory, as we have mentioned, is a constraint across the industry, but demand is still remaining extremely strong. So hence, pricing power for this company is extremely strong. The company is very focused on capital efficiency, and the analyst is projecting forward ROIC of 29% and an ROE of 33%. Okay. The company, the shares have actually seen a recent breakout above the downtrend line, and we think this is extremely bullish trend change. Okay. The second stock we'd like to highlight is National Retail Properties. This is a company that's headquartered in Orlando, Florida. It basically acquires, owns, and develops freestanding net lease retail property. The company owns 3,000 investment properties located in 48 states. So the analyst is seeing this as a late-stage recovery play. The company has been guiding very conservatively, and given the reopening theme that we are expecting to continue, the guidance is probably going to be raised going forward into 2021, into the rest of 2021. Company is still trading about 10% off its 2019 end-of-year price. So we think the uptrend is very well supported at the 20 and 60-day moving average, and we are likely to see further upside for this stock as well. The last stock I'd like to talk about, it's a little bit more fundamental, is Evoqua Water Technologies. It's a company based in Pittsburgh, Pennsylvania. It's one of the world's largest providers of water treatment equipment, systems, and services. And the company operates in a couple of business segments, both in terms of integrated solutions and services and applied product technologies. Now, those of you that have been reading the news in the US will know that actually water infrastructure modernization is a major long-term theme. It is part of the infrastructure package put forward by President Biden. So the company itself is actually the largest public pure play on water treatment technology. It's not a sector which I think many investors focus on, given that it's a very fragmented landscape. But the company is using its very strong cash flow to do a roll-up strategy. So M&A is likely to see this company further consolidate that market. Now, the Biden infrastructure plan has set aside $111 billion for water infrastructure, and a key objective is to replace all of the water pipes containing lead. There's a further $45 billion initiative which upsizes the existing programs of the EPA. There's also another $56 billion in grants and loans to modernize drinking water, wastewater, and stormwater systems. So definitely this is a company which is well levered into that infrastructure package. Okay, so these are, I guess, the fundamental recommendations that we see.